May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the US dollar index. Let's just jump right into it. We're looking at the monthly time frame here, the weekly, the daily, and the 4 hour. All right, on the monthly, I've been saying it for a long time. If you've been paying attention, you know. Wait a minute, let me choose something else here. There you go. You know that I've been watching this ascending channel that the market has been in on a macro level. All right, and it's bullish, making higher highs, higher lows, higher highs, higher lows, higher highs, breaking structure each time it makes a higher high. Boom, boom, break a structure, and we may be on the higher low right now, which would lead to a possible or potential higher high, the next higher high within this channel. Right, I've been saying that for months, and uh, yeah, the market, if we take a closer look at this, the market uh, took out this low here, but all it did was sweep the liquidity, the sell side liquidity there, and you saw the recovery behind it, and then the new month of February opened up here bullish, heading back into this range. Heading back into this range. All right. And if you remember, I made a big deal about this wick. And I said I did not want to see a close past the halfway point of the, the length of this wick. All right. Because that would be a bearish sign, a bearish indication. All right. A bullish indication would be if the market respected that wick and that 50% area and closed above it, and that would be a bullish sign for me. Well, so far we have an inkling that maybe there's some reality to that forecast because we we closed last week back in the range of this consolidation. All right, if it leads to what it the potential of it is that it could lead to this high as the next liquidity target, which would be a whole different story. Now, if we go down to the weekly, you can see that the market did close well above the high of the preceding candle, and you can see clearly the market did respect the 50% of that weekly wick, or the 50% of the wick here on a weekly basis. It opened above it, stabbed well below it, still in the sell side liquidity there. But you see the new week, the following week anyway, closed well above the high of the previous week, at which were both above the 50% of this weekly wick. So I like that. Now, what are we going into? We're going into a bearish fair value gap here from this low to the close of the following candle. All right, the following candle behind this one, the number three candle. This is one. This is two. This is three. All right, and this is that bearish fair value gap, and the market is pulling right back up into that. Now, this is an interesting situation. Why? Because if we go up to the daily, and let's take a closer look at this daily, if I can get off of it for a second. Boom. Right there. There you go. All right. You can see when the market made that move down, a big old nasty move with all the geopolitical shenanigans going on between Trump and him wanting to put pressure on the U.S. dollar. He thinks a weaker U.S. dollar is healthy for the economy and all. Uh, and there are a bunch of things happening that 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 saw that market have that flash crash, and then you see the quick recovery. This is a V-shaped recovery, folks. Again, here is the 50% of that previous wick over here. This down and up is that wick. All right. And you see that the market closed above it. Then follow that last week, all of last week, the candles just kept climbing higher and higher, save Friday's candle. Now you can see if you put your Fibonacci retracement at the top here to the bottom, you can see that there is an area here that I have circled, all right, called the OTE, the optimal trade entry. All right, I said if the market pulls back into this area, this is where I'd be looking for signs that the market may want to shift. All right, there may be a market shift here. All right, and well, anything above the 50% of this trading range is where you want to see uh, uh, the market short from. You want to short from that market, from the market above the 50%. That is premium prices. This is discount prices. This is where you want to take your longs. Anything below the 50% is where you want to take the longs. You wanted to get in your longs down here, not so much up here. This is where you're going to be looking for the market to do what structurally you can expect it to do, to find uh, uh, resistance up here in this OTE area and start to turn down. All right. Doesn't mean it's going to do it. But when you see that overall we are in a bearish market, right? And you see it push well past the swing low and close below that swing low, this pullback is a correction to this down move. And you want to see where that correction ultimately ends and the resumption of that bearish trend to continue. So we're looking at this kind of action here, lower lows and lower highs. All right. So uh, this is fair. This is a fair expectation to look for the market to go lower here. So am I in a bearish? Am I bearish on bias? Yes, I am. But the fact that we closed and respected that wick over here, all right, I'm not going to be too quick to act on it. Like right now, look at that. We had a bearish candle on Friday. All right, doesn't mean I'm not automatically looking to short against the US dollar from here. All right, I think this could go higher. I do think this can go higher. You see this downturn candle, this opposing candle right there, that bullish candle in this otherwise all bearish candle move. This is where you'll find most of the time the opposing candle is the where you would see resistance in in a bearish market. You'll see resistance there, and I'm thinking that we're probably going to go up and test that area. All right, and that happens to overlap the OTE levels. So uh, I'm not too quick to look for shorts here. I'm bearish. The market is bearish, all right, but I think there's room for the market to move up higher here. That I hope you get what I'm trying to parse there. All right. If we go to the 4 hour, I want you to see. I want to take a look to see, do we see any evidence of anything happening? I'm talking about the market coming up here, right? All right. That's where you see an area, a pretty well defined area of fair value. All right. This actually should be a there you go. And um yeah, this could be refined. Oh, sorry. This could be refined to this area here. I'm looking at this high as a draw on liquidity. See how these up close candles, this is a 4 hour chart. All right. I'm looking at this drop, then this. What is that? I don't know. I'm not sure if it's a change in the state of delivery once the market came up past it and continued higher. I'm not sure. I don't think. I would love to have seen this come up a little higher and then down. Then I could say, all right, if the market passes that, we have a change in the state of delivery from bearish to bullish. This looks like an internal high and part of this overall down move. This is the high I would love to see broken and say, oh, well, we definitely have a change of state of delivery up here. But right here, this is iffy. So as the market is moving up higher, I think we're going to find some resistance here. That's my opinion. All right. I think this will act as a draw on liquidity. We have nothing but, look at this. This is nothing but um, fair value. All right. An area of fair value, a fair value gap. And the market looks to be mitigating that fair value gap. All right. I want to see what happens here. If we see a, a move down lower, I think it'll be just to take out these lows and to uh, quite possibly hit the order block here, right below these lows, and then turn up and take this out. All right, that would be a pretty strong bullish indication for me. All right, we are again above the 50% of this trading range. So a move down lower, I love to see a sweep of liquidity before a move begins. I would be interested in buying against the US dollar, buying the US dollar, excuse me. All right. And trading with its strength if it sweeps some liquidity first. If it just continues up higher, I'm not doing anything with the US dollar. All right. If it comes up here and then I start to see a higher high, higher low, higher high, then a lower low, then I know the market is turning around. This pullback is over and I can start shorting against the US dollar. I hope that is clear. All right. You got to be patient with this market. You have to be patient with this market. This is consolidation, and we're going right back into that consolidation. This isn't a great area to be trying to look for trades. That's it. You know what I mean? This is a interesting area to target, so I'd be looking for shorts from there. But I wait. You got to wait for a change in the state of delivery. That's all there is to it. All right, and there I gave you some things to look for to find if the market is changing on us. Okay. Hey, be careful this week. All right. Thank you for watching, and may profits be upon you.